Introducing the Chart Guy's Swing Report, a weekly digital publication that uses technical analysis to identify long-term market opportunities. Understand the market from a swing trade perspective. Follow institutional money as it rotates from sector to sector, and make the most of the Swing Report's weekly trade opportunities, with key entry and exit levels provided. Performance is tracked and updated weekly. For more information, visit us at chartguys.com. Now, let's check out some charts.
Hey everyone, checking in on the stock market today. No video today because it's dark and I don't feel like dealing with any lighting. So we had a little bit of a pullback, essentially an inside bar day today, so not a whole lot changing. But what we did see is some temporary climaxes in some of our euphoria assets. So just quickly looking at things, we've got Bitcoin over the weekend hitting a top at 42,000, pulling back 25% plus to get down to 30,000. Tons of volatility. Because of this volatility, I'm now focusing on trading crypto more than stocks. 2020, it was stocks more than crypto. My stocks profit was twice of what crypto was. But so far in the first 11 days of 2021, my crypto profits are about 3 or 4 times what my stock profits are. So just going wherever the volatility is. But point is, a climax top. Tesla today topping out. Climax top, closing week. Wouldn't be surprised at all to see a gap down open tomorrow for first hourly oversold conditions, which we'll be keeping an eye on for a bounce. NIO with an explosive move up. Profit taking all day. Dilution news after hours. Downgrade after hours. Bears piling it on. Gap down open. Shaping up there as well. So just some names that were extremely extended and euphoric, seeing some temporary tops. And it has to do with the dollar bouncing, which we will look at in just a moment as well. So if this inside bar were to break bearish, where are we after hours? Trading sideways, tightening up. So if we were to break bearish tomorrow under 377.72, we have plenty of space to be scouting a daily higher low. Anything above 364.82 is a daily higher low. We had a hold of support this morning, and we had weakness in QQQ and XLF. We had SPY hold the low of yesterday by 62 cents. And what was most notable is that the healthcare sector was at the high of the day and at all-time highs when our other sectors were weak. So we knew not to be too distracted because we knew it wasn't going to be an all-out dump day as long as one of our major 3 sectors is up at their highs while everybody's else at the low. We can definitely see weakness in that scenario, but we're not going to see an all-out dump. So we'll see how the inside bar breaks. Of course, if it's a bull break, back to all-time highs. Just one note on the narrative that we're going to see. The fear narrative for the next week is going to be about these armed protests around 50 state capitals, yada, yada. Again, I'm not overly concerned with this as far as impact on markets because, again, we have not seen militarized police even attempt to squash anything that these armed protesters are doing. And I know they're really good at doing that when they put their mind to it and they bring out their toys. So I don't have a whole lot of concern, but just be aware that we could see some headline reaction because that is the narrative, at least in the short term. IWM, low of Friday, 204.66, held inside bar. If the inside bar breaks, there's plenty of space for the daily higher low if it breaks bearish. If it breaks bullish, we're right back at the all-time high. QQQ, daily consolidation underway by breaking the low of Friday. Anything above 305.98 is a daily higher low that we're going to be keeping an eye out for. Daily uptrend are our guys. And just keeping it simple. XLV, all-time highs, strongest sector out of our major sectors the last couple of days. When we lose the hourly uptrend, plenty of space for the daily higher low here. Financial sector, still a possible daily bull flag. We did break the low of yesterday, but only by 2 pennies. Close at the high of the day. If the bulls show up tomorrow, 31.26 is right there for potential continuation. Still a very strong daily uptrend. Biotech sector, daily lower high has been set. Anything above 138.91 is a daily higher low. And we're watching just the tightening equilibrium. So we'll scout that higher low, and then we'll be looking right back at the all-time high if the bulls head back to resistance. Semiconductors, daily inside bar, highest close ever. NVDA bulls showing up in a notable way. Look at the back and forth volatility last week. Big bull move, gave it all back, big dump, big bounce, just a ton of whiplash. And a big bull day today, gave a lot of it back again, but watching to see, can these bulls break this weekly range, which they did. Can we follow through now after sideways trading for a couple of months while the sector the last couple of months has just been going up? So NVDA trying to play a laggard. But again, bottom line is we have tons of space for higher lows. TAN, the solar sector, consolidating. Anything above 97.64 is a daily higher low. EMA 12 support. Bulls need to change the hourly trend back in their favor with a hold of 112.30 and a break of 117.09 to confirm the hourly trend change, to set the daily higher low, and to be looking back up at the recent high. So the weakest of the weak sectors that we're looking at are seeing daily consolidation with plenty of space for daily higher lows. The strongest sectors are not even seeing any daily consolidation. So obviously at this point, the bulls still have full control. The burden of proof is on the bears. And the fact that we're seeing a solid dollar bounce over the last 3 days, which is having an impact on metals and cryptocurrency, not really having an impact on stocks at the moment. MSOS, this is the USMJ ETF, bull flag confirming all-time highs. Very notable strength there, and that's where the majority of my swing trading positions lie because of the blue sky breakout, because of the catalysts from the Senate vote, and just a lot of strength. Again, look at this volume where it's just been nothing but increasing volume on this fairly recent ETF. And even on a day like today, just double the average, more than double the average dollar volume. And the more money that pours into this ETF, the more buying of the underlying companies this ETF is doing. Definitely a bit extended at this point, certainly not suggesting making entries now, but this is where my focus has been for the last couple of weeks. The VIX tightening up. So it's not your classic equilibrium, but we've got our high, low, lower high. Higher low is now 2140s, and anything under 2920 is just a lower high, watching for the potential that we stay within this tightening range. So the dollar bounce is for real in the sense that this is the most significant bounce that we've seen in a couple months. That being said, we know we need a daily trend change if we're going to believe anything about follow through. So once this move tops out, we're looking at resistance of 91.02 and 91.24. And once this move tops out, whether or not the bulls can change that daily trend is going to mean a lot. We had a daily falling wedge that we have been keeping an eye on. And I've been talking about the dollar a lot. Again, not going bullish the dollar and not making any trades based off of it, but just keeping a close eye on things because of how bearish everybody has been the dollar. So here's your daily falling wedge breaking bullish. And now we can zoom out and look at the longer term falling wedge, which is the more important one for me. And it's just this weekly chart. And I would tweak it a little bit to make sure nobody's closing under there, but anything under 94.30 is just a weekly lower high. If this falling wedge plays out and breaks bullish, let's not forget our 6-month scenario. It is entirely possible that the dollar remains in a 6-month equilibrium for a couple years. We have to break that weekly falling wedge bullish for that to be a possibility, but we are holding 88.25 at the moment. Step 1 is a daily trend change. Step 2 is a weekly bull break of that falling wedge. And we'll see over the next month or so whether or not bulls can pull that off. So again, the dollar bounce is definitely helping with this weakness in metals. The 4-hour range is real tight on gold. Bulls need a break of 1856 and 1857. If those levels break, we zoom out and we scout a daily lower high, anything under 1959. Silver is the same thing. Sideways on the 4-hour. If it breaks bullish, getting over, that's gold. There's silver, same thing. 25.27 and 25.51 have to break. Then we zoom out and scout the daily lower high. We have to be cautious the potential that we confirm a monthly downtrend on the metals. Again, I'm in bullish positions based off this support, but if this support breaks, we confirm monthly downtrends, and nobody is calling for monthly downtrends in the metals. So again, there's a lot of one-sided trades out there, whether it was bullish Bitcoin, whether it's bullish metals, bearish the dollar. just got to prepare for every scenario. And no matter how unlikely the scenario, just go over it in your brain and say, what would I do if this happens? And I just had that thought exercise in the crypto video that I put out. Nobody's talking about that top in crypto, in Bitcoin, being the high of 2021. But we absolutely need to have that thought exercise. Even if it's unlikely, what am I going to do? What is my game plan? If the unlikely happens, how am I going to respond to it? And that helps us. Just like we buckle our seatbelt when we get into the car, we're not planning on crashing. Just like, if we're a family, we have a fire plan. If there's a fire in the house, where does everybody meet? Outside. We prepare for any scenario, no matter how unlikely. Miners. Week close today, down near the low of the day. Hourly chart has to change the trend. It's the potential of an hourly falling wedge shaping up. Something to keep an eye on if bear breaks continue to lack any follow through. 35.72 was our low here. Bulls would have to see a break of 36.26, 36.28 to try and shift this hourly momentum. But just like the metals, that would mean zoom out and scout a daily lower high on the bounce. Oil is sideways, 4-hour higher low established at 51.50. We would have to fail the high of 52.75, confirm a downtrend on the 4-hour, and then that would just mean zoom out and look for a daily higher low with tons of space for that higher low to form. If 52.75 resistance were to break for the bulls, the next level we're looking at, 53.60. Natural gas bulls showing up, daily bull flag confirmed, taking out multiple resistance levels. Now 285 is the next level that the bulls want to take out. Our daily support, now the most important level, is 2587 from here. Weekly lower high resistance broken. It looks like our monthly higher low is shaping up. Now we have to break 310 for the first monthly bull trend change that natural gas has seen in multiple years. So a nice shift on the daily from that bull flag. Let's see how much follow through we can put together. Keeping in mind that we have not changed the weekly trend bullish. We are coming from the low, so eventually a weekly higher low and higher high will be needed to try and change that monthly trend. So that's where we stand overall. Not a whole ton of trading today. I did make a Tesla and let's go over. So I made an NIO bounce play attempt first thing this morning and failed. What were my levels? So we saw the low of the day. We saw a big bull push to the high of the day, and I was bottom fishing here. So my stop was under 63, and I made an entry in the upper 63s, was stopped out, and then we did see it bounce follow through. But as soon as I was stopped out, it was a 3/4 of a day loser, and then Tesla was showing us a ton of weakness. We know Tesla loves those 5-minute oversold bounces. Couldn't turn that down, and ended up making an entry just by being patient because I already had that loser in NIO. The last thing I want to do is just continuously pile into bounce attempts and keep getting stopped out for a day or a 2-day loser. Because if I had lost this Tesla bounce trade, I would then be done for the day. And I don't want to be done for the day. So I was patient. I saw the break of 820 and I entered, got a fill in the 820s, 820 and change. Sold half at 830. And then let the second half play out to upper 830s. Did make a mistake in terms of, again, my conservative style of trading. When I make mistakes, I leave money on the table. So this that bounce ended up being a day and a half maker. So to offset the 3/4 of a day loser, I then had a 3/4 of a day maker. And I did short it up here. And I shorted the high of the day, and my stop was 855. This 5-minute higher low was healthy. And it looked like a bull flag, and we failed the bull flag. I exited too soon. I exited break even, pretty much 850, when obviously had I held it, it would have played out really nicely from there. So that was just a little bit of a lesson. I'm much better at buying dips and playing oversold bounces than I am at nailing tops as a short. It's just one of my edges versus something that is not one of my edges, but a little bit of a lesson to review because definitely left a solid day maker on the table there as well. So again, there are no red flags for the bulls bigger picture. Being cautious as always when things are extended and things feel euphoric. But as long as we keep setting daily higher lows, these bulls continue to have complete control from here. So I hope you are well. Hope you had a good weekend. Don't forget to do good things out there. I'm out of content still. We gotta wait for spring for some new outside content, so we're gonna go back to Iceland for the next week or two with end of video content. And if you ever get the chance to go to Iceland, it's extremely expensive, but very worth it.